You're still watching the Business Day Breakfast Show. This is Business Day Television, and this is the Business Morning segment. My name is Elizabeth Musa. Now let's bring you the news in detail. Nigeria's headline inflation moderated to 20.12% year-on-year in August, down from 21.88% recorded in July. According to reports, the inflation easing in August inflation reading was driven by softer energy prices and ongoing stability in the FX market. The Central Bank of Nigeria sustained monetary tightening, and efforts have reportedly alleviated demand-side pressures supported by a moderate expansion in credit allocation. Food and core inflation also moderated, easing to 21.9% and 20.3% respectively. Moving on, members of the Monetary Policy Committee have revealed that the Naira stability is expected to persist over the medium term as speculative activities continue to decline. The Naira on Monday climbed to a 5-month high to 1,497.46 Naira at the official market, buoyed by easing demand pressure and improved foreign exchange liquidity. Reports show that the last time the currency was stronger than this level was on March 4, 2025, when it traded at 1,491.67 Naira per dollar in the Nigerian foreign exchange market. At the parallel market, also known as the black market, the Naira appreciated to 1,525 Naira compared with 1,530 Naira recorded the previous week. Moving on, Dangote Refinery has marked its first anniversary of petrol production, exporting over 1.1 billion liters of premium motor spirits between June and the first week of September 2025. Aliko Dangote, the president and CEO of Dangote Petroleum Refinery, announced the development at a conference on Monday, declaring that the facility's operations have ended nearly 5 decades of recurring fuel queues across the country. The company says since it commenced petrol production on September 15, 2024, the 650,000 barrel per day refinery has consistently supplied the domestic market while creating new streams of foreign exchange through export. Dangote revealed that the export alongside domestic supply underscored the refinery's ability to meet Nigeria's demand while strengthening the economy. To end the news, Tanzania's Electoral Commission has disqualified opposition presidential candidate Lahaga Mpina for the second time on Monday, reversing a decision made 2 days earlier approving his nomination. The disqualification of Mpina, who leads the country's second largest opposition party, reportedly leaves President Samia Suluhu Hassan a clear run at next month's election, with only candidates from minor parties allowed to compete. The vote will also be held without the leading opposition party, Chadema, which was disqualified in April after failing to sign the Electoral Code of Conduct as part of its call for electoral reforms. According to reports, Chadema presidential candidate Tundu Lissu has been in jail for over 5 months after being charged with treason in April. Well, let's go on a quick break, and when we're back, we'll be discussing the Business Morning right here on the BDTV Breakfast Show. Do stay with us.
They say money never sleeps. Wake up to clarity, insights, and the stories driving business in Nigeria and beyond. From the heartbeat of small and medium enterprises to the pulse of national economic policy, this is where business meets perspective. With expert guests, real-time analysis, and stories that matter to you. We go beyond headlines to bring you the full picture. Join us every morning as we break down the numbers, decode the policies, and spotlight the people shaping our economy. This is Business Morning.
Welcome back. You're still watching Business Morning right here on the BDTV Breakfast Show. Let's move to the first conversation for today. Nigeria's stock market staged a strong rebound on Monday as investors reaped significant gains amounting to 986 billion naira, reversing the losses recorded in the previous trading sessions. The NGX All Share Index rose by 1.78%, closing at 101,562.36 points, while the market capitalization surged to 57.47 trillion naira, driven mainly by renewed buying interest in blue chip stocks. Market analysts attributed the rebound to bargain hunting by investors who sought opportunities after recent price dips, particularly in the banking, oil and gas, and industrial goods sectors. Heavyweights such as Dangote Cement, MTN Nigeria, and Guaranteed Trust Holding Company were among the top gainers that fueled the market rally. Trading activity also improved, with both volume and value of shares exchanged showing notable increases, signaling stronger investor confidence. Financial experts note that the rebound reflects investors' resilience despite ongoing macroeconomic challenges, including inflationary pressures and currency volatility. With this positive movement, market watchers expect sustained momentum if macroeconomic indicators stabilize and corporate earnings continue to beat expectations. Well, this is what we will be spotlighting this morning on the Business Money. And joining us to analyze this topic is Muktar Mohammed, is the founder of Finance with Muktar, is a personal finance platform established to help people grow and change their mindset on finance. Is also an international finance and economic analyst in major platforms across Africa. Welcome to the show, Mr. Mohammed Muktar.
Thank you. Good morning, Elizabeth. My pleasure to be on
Thank you
your
very
program.
much for joining us this morning. It's good to have you. I hope you are not so affected by the rain. Certainly you are at home, but I hope it doesn't affect you in any way this morning.
No, not at all.
Thank you for joining us. Let's talk about the conversation today. Really, what were the key factors behind the 986 billion naira rebound in market capitalization, and how sustainable is this rally in the near term?
Well, for the key drivers of that, investors are seeing opportunities to get some value stocks, some fundamental stocks with good numbers. I think that's what drive the kind of recovery you saw yesterday. You saw that in virtually every major sector, the banking sector, the industrial goods sector, and the oil and gas sector. So what you saw yesterday was just investor sentiment, especially in the banking sector. When you look at some of those key drivers in the banking sectors, you look at the tier one banks, and investors are seeing a good entry point, especially with price, and compared to what we had at the end of last week. So I think it's a good entry point that investors were looking at for stocks like Zenith, Access, GTCO. When you look at the fundamentals, and you have to look at these three banks that they've already beat the recapitalization drive in the tier one bank, and also we're expecting interim maybe half-year report that will lead to interim dividend payment. I think investors are beginning to factor in that and beginning to take position. Will this be sustained? It's very difficult because, again, sustainability in terms of price movement in the market has been a big challenge, and that is largely driven because of we have more of retail investors playing the market than what we used to have institutional investors that are in there for the long term. So it is all a most likely a trader to an investors market, and it seems these days in the Nigerian market, the trader seems to take the day because everybody's looking at profit taking, and after one or two stocks have gained, they want to take profit. And you won't blame them because, again, a lot of them that used to play the fixed income space, which sometimes goes for 6 months, 3 months, and now in the equity market. So they are not used to being there in the long term. So you are seeing that playing out. So sustainability in the long term is depending on a lot of variables, macroeconomic variables, monetary policy, stability of the Naira. Will we get new investors coming in? Where foreign portfolio investors? Those are what will play out going forward.
Really, Mr. Mukhtar, really, what extent was this rebound driven by bargain hunting versus long-term investor confidence in Nigeria's equity market? Could you shed more light on that?
Now, what we have in the market, we have bargain hunters, they are there. Then we have long-term drivers. Now, if you look at the market, you realize that bargain hunters are always playing the insurance space because they see value there. And currently, with the recapitalization drive, a lot of bargain hunters are there. So bargain hunting is part of the market, and long-term investors are those that go for the fundamentals. And that's why you see that a lot of the investors, the sentiment that you see are on the fundamental stock like the Zenith Bank, GTCO, Access Bank, UBE, and also Wema Bank. And so those are where you see fundamentals. When you look at the bargain hunting, you could see it's not that they don't have fundamentals, but there's room for growth. I'm looking at the financial sector. You look at a lot of them are playing FCMB because they feel that the potential of FCMB has not gotten to its peak, and also Sterling Bank. So those are where the bargain hunters are. Then for the long-term investors, they are pushing their 10 in the strong first tier banks, and those banks that are perform rating very well, either in terms of interim dividend payment and in capital appreciation.
And what we've also seen is that the banking, oil and gas, and industrial goods have led this rebound. Do you see these sectors actually sustaining this momentum, or would you say this is a temporary surge?
Okay, let's look at these three sectors. Let's dissect them. You look at the banking sector. Yes, the possibility of sustainability in the banking sector is high, but it depends again. We are waiting for the approval from the Central Bank of Nigeria over their half-year result. If that approval is done and most of these banks are able to pay interim dividends, like what every investors expect, that could be a key driver going forward in the market, especially with the banking stock. Remember, we have the forbearance issues that we're made to understand that most of these banks might not be able to pay dividends. And then all of a sudden that changes within 3 months and they are paying dividends. Then you see that reflect in the market price. Don't forget also we have the recapitalization drive that will end sometime in March. That also will be where investors will be putting their eyes on. Presently now, we still have the right issue of UBA ongoing, and we still expect other of them to come to the market before the end of this year. That could be what will drive that sector in the long term. And in the short term, I think that approval for dividend payment could be a game changer. Now, you look at the industrial good with the report that were out today by yesterday by MBS, Nigerian Bureau of Statistics, tells you that inflation is trimming down. And so when inflation comes down, what it means is that a lot of Nigerians will have money to begin to buy consumables. That means their money will be able to go far. And so that also could play a positive effect on the industrial goods sector. And if you look at the oil and gas sector, we've maintained stability in that space. We've seen that a lot of bargain hunting activities in ARA there. And this is due to the fact that we've seen oil price stabilize. We've seen reduction in terms of oil theft. We've seen policy that will drive that sector in play. So investors also are looking at the short and to the long term queuing in. So definitely, when you look at those three sectors, the banking sector, the industrial good, the oil and gas sector, you are definitely confident that in the near and the future, they have very strong fundamentals.
Thank you very much for breaking it down across the sectors from banking to oil and gas. But let's talk about foreign participation now. How has foreign investor participation been shaping current market performance, especially in the light of FX volatility and also the repatriation concerns?
For me, I'm excited when the locals are playing the market. I keep saying it. And I was excited, especially when you see that a lot of locals are really helped the market to where it is today. And so that for me is the excitement I get. Foreign investors, yes, they are trickling in their numbers, definitely. And like I said, when I started, they seems to be the one that sustain the bullish ones. But sometimes also they are the one that drive the market down, especially when external issue comes, low oil price, FX shortage. They seem to want to exit almost at the same time, and that cause normally have an impact on the market, and this impact is negative. So yes, we are getting there. We are seeing that inflow, especially from Nigeria and the diaspora, and playing the equity market and also playing in other sectors, and that has helped stabilize the exchanges. So we expect that we'll see inflow of foreign investors, especially if we see that most anticipated rate cuts in the United States of America. A lot of investors will be looking at Nigeria. But again, you also expect rate cut from Nigeria. So, but you see a lot of investors, rather than going to the fixed income space, they might be playing the equity market. When you look at what is the kind of reforms that are happening in the insurance sector, that is happening in the banking sector, definitely expect foreign investors to play that space. So we're expecting them to come, but as it stands now, I think local investors have been able to hold the market to where it is, and that's why you are not seeing those kind of volatility that you normally would have gotten if we all have these foreign investors, especially when we have that huge volatility in the exchange rate. But there's always a challenge because, again, most of the locals that are playing the market are retail investors, and that's why you don't get that long momentum in terms of bullish ones. So what normally happens to the markets is that when you have the foreign investors, they normally help sustain a longer bullish ones.
All right. And with this inflationary pressures and Naira fluctuations still present, what are some of the risks that could reverse these gains in the coming weeks as we look ahead?
You and I know the risk. One of the risks is if we have these issues of oil price, no two-way assistance, or our reserve goes down, definitely that's high risk. But again, you also have to look at the oil sector don't seem to be the only one driving Nigerian FX inflow these days. We are beginning to see the non-oil sector. So, and if that sector is able to improve, definitely we won't see the kind of shock that we normally we get. But I think one issue we need to watch out for is stability in terms of the FX. You read out. I think there's been a lot of stability in that space. Even at the close yesterday, we got that the Naira exchange for 1,495 Naira in the market. So definitely that shows that we are moving towards stability. You need to understand that a lot of people want to play the market, especially for investors, but they were scared of the exchange rate entering at 2,000, exiting at 2,500. But now there seems to be a little bit of stability. That corridor stability is maintained. So you see them trees to come in. But if that corridor stability has any external shocks, then definitely the gain that we are seeing now will elude us in the shortest possible time.
And if we were to look at policy influence this morning, what extent is the recent government or central bank policy moves, what extent are they influencing investor sentiment on the NGX?
Well, for the central bank, you've seen those positivity, especially in the banking space. The recapitalization, it has really helped confidence in that space. You saw how those stocks have moved from where they were to where they are now. And you can see this inflow of investors, especially during their right or public offer. So definitely that policies I've seen is those are CBN-driven policy that have seen the impact on the market. But again, the impact, the negative impact is what we have seen that was responsible for the kind of losses we suffered 2 weeks ago and last week, whereby some of these banks started coming up with report telling investors that they are still waiting for approval from the CBN. I think that also is a policy that they need to look on how they can get banks result approved in time for investors to take position. But by and large, I think their decision has really helped the market, especially in the area of recapitalization, in the stability of the FX market also. That have drives in trickles of foreign investors and expecting more to come in.
Mr. Muktar, how much of this rebound is linked to expectations from upcoming corporate earnings season, and which of these companies are most likely to drive the further upside?
Elizabeth, when it comes to the Nigerian equity market, when the banking sector sneezes, the market shake. So definitely, you could see, like I said, you could see the gainers yesterday, you could see the banking sector leading, because a lot of investors are looking forward to that interim dividend payment. In Nigerian market, dividend is king. A lot of investors see dividend as a king, especially when you have challenges in terms of liquidity, economic challenges. So they see dividend as king. So definitely, that is going to drive a lot of positivity into the market when those results come. And you've seen the expectation, you've seen the price movement there. Also, we expect that the industrial goods have given us the half-year return. We are looking forward to the year, the third quarter return. MTN, Nigerian, especially the telecommunication space, we are looking forward to get those results. Those are part of the positivity that we expected, and that will drive price. But the key driver of price at the moment is the banking sector, especially the tier one banks.
Interested to hear that. But how about the retail investors themselves? Are they also actively benefiting from this rebound, or is it largely dominated by institutional flows?
No, 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 no. I think the retail investors are really benefiting from it. Like I said, we don't have so much of institutional flow, and that's why we've not been able to see the kind of capital gain that we normally would have seen if we have those long-term institutional investors playing the market. So definitely, I can tell you that with the kind of price oscillation that you see in the market, it's largely driven by retail investors. Today they are in, tomorrow they are planning to take profit, and they are not. They are again. When you look at this season that we are in, for retail investors, it's a season of commitment to pay school fees, and a lot of them are also looking at that space. But and again, coupled with the fact that dividend that were not declared in time, like what they normally would have experienced. So a lot of them are benefiting from that movement, either by selling or they are looking for a good entry point by reshuffling their portfolio.
Right. And Mr. Musa, I'm very sure that you and I don't want this to be short-lived. We want market stability. So what measures really should regulators and the NGX put in place to ensure that this rebound actually translates into long-term market stability rather than something that is short-lived?
Yeah, but we need to look at corporate earnings. You have to give it to the NGS. The NGS have made provision for that, and sometimes it's not in their hands, especially when you look at the financial sector, the banking sector, and others that need to get approval from the Central Bank of Nigeria before those results will be approved. I think they need to look at that and see how they can work together with the Central Bank of Nigeria. I think what we need to see to continue the kind of runs that we are seeing, the sustainability we are seeing in the market, is for us to make sure that corporate governance is adhered to, results are released at when due, and also principles that regard to trading and selling is also improved. And that's why I'm excited with what SEC is doing about it. Instead of having 3 days, we are now having 2 days. All that also will boost investor confidence. I think they're already doing that. Just that they need to do more, especially in their collaboration with the Central Bank of Nigeria as regard financial servicing company releasing their results in time.
And looking beyond this rebound, because we have to let you go now, what is your outlook for the Nigerian equities market through Q4 2025, and where really should investors position themselves?
Q4 2025 will be very, very exciting, especially at the end of September. We expect to see those results. Any moment from now, we have to see those results from industrial goods, from the telecom sector, from the insurance sector, from the banking sector half year. Some of them are already giving up their half year results, those that are not paying interim dividend, and they have been impressive. And so you shouldn't forget the recapitalization drive of the insurance sector at the end of this month. We will hear from their regulators the plans of each of these insurance company that will drive fourth quarter, third quarter, second half year result normally determine the movement in the financial sector going to the year end. You shouldn't forget that at the end of this third quarter, what is left is just 6 months before the recapitalization. That's a key policy that will drive. We have seen inflation stable. That's another key policy that will drive industrial good and consumer goods sector. So I'm optimistic. If you look at the macroeconomic indices, it's not as volatile as it used to be. You could think that rates either go down or rate being maintained. So that also is a positivity to the industrial goods sectors and to cost of funding also. So first quarter, I think I'm excited about it. I'm looking forward to it, and I expect it to be positive. And the physical side are driving up policy that are making companies to recover, especially the FX challenges. So fourth quarter will be very excited, but it largely will be determined by what we see in the third quarter. And if what we see in the half year from the industrial group, from the telecom, is anything to go by, we expect that the first quarter will be back. Then for the banking sector, the tier one bank, like I said, we are waiting for them. And once those results come and they are positive, that have an impact on the fourth quarter. So for me, where I'm sitting here, I think a lot of positivity to look forward to towards the fourth quarter.
We'll hold on to your words and hold on to the positivity, just like you said. Thank you very much, Mr. Muktar Mohammed, for joining us today on Business Morning.
Thank you for having me, Elizabeth. My pleasure always.
Thank you very much. We'll be speaking with the founder of Finance with Muktar. It's a personal finance platform established to help people grow and change their mindset on finance. Thank you very much for joining us. Up next is still Business Morning, but stay with us. We'll be on a break and we'll be right back. Welcome back. This is Business Morning right here on the BDTV Breakfast Show. Nigeria's food culture is no longer about taste. It is fast becoming a serious business opportunity, with food tourism emerging as one of the most promising niches in the country's travel and hospitality sector. Across the globe, culinary tourism is valued at more than $800 billion annually, with travelers increasingly seeking authentic food experiences as part of their journeys. Nigeria, with its rich culinary diversity from jollof rice rivalries to signature dishes like suya, amala, tuwo, shinkafa, and fisherman soup, is well positioned to cash in on this trend. Now, food tourism in Nigeria goes beyond eating. It is an economic ecosystem with restaurant, hotels, street vendors, farmers, food processors, and tour operators all potentially beneficiaries. Organized food tours, cooking classes, and food festivals such as the GTCO Food and Drink Festival in Lagos already attract thousands of participants annually, generating significant revenues and visibility for local businesses. However, the buzz around Hilda's Jollof has inspired food festivals and culinary pop-ups and tourism campaigns, creating opportunities for restaurants, local farmers, and event organizers. Now, analysts argue that if harnessed strategically, such culinary icons could help Nigeria tap into the $800 billion global food tourism market. Well, joining us to give us more insight on food tourism is Mr. Ayodele Adio, is the MD of Adio Strategy and Communications, is also a politician and a tourism expert who works across Africa. Welcome to the show, Mr. Adio.
Thank you for having me. It's good to be on.
It's very good to speak to you this morning. Now, we know that Hilda Bass's jollof rice has attracted global attention. How really can Nigeria leverage such moments to brand its cuisine as a global product? Because there have been conversations about the fact that while this gained much global attention, there have been conversations about the fact that we could have done more to actually latch in on the opportunity that the platform gave her. So what do you think?
Well, firstly, I must commend the magnificent efforts of Hilda, who has put not just her name and her brand on the global map, but also has put Nigeria and Nigeria's food and culture, on the global map. And that's a significant feat that always helps to boost, local tourism or food tourism, like you rightfully and aptly, talked about in your introduction, being an $800 billion global industry. So with Hilda's magnificent effort, we've been able to bite, the first slice out of that market share. And what we do after becomes a lot more consequential because we've gotten the global attention, after which every other thing can be built upon. So, the fact that now people know about Jollof globally, the fact that the new record has been broken, the fact that people were watching from across the globe sort of stimulates an interest in what this whole jollof frenzy is about. And perhaps that, also makes a lot of curious tourists want to come and try, what this jollof rice is about. And when they get on the plane and get into Nigeria, it means business for hoteliers, it means business for transporters, within the local economy. It also means business for restaurants, for people who sell drinks, for nightlife, and all of that. And so you can see that the value chain is humongous, just simply by telling a brilliant story about jollof or about a brilliant story about food. So I think that this is that, and what we do after this, becomes largely consequential. But I think that the most important thing here, is the fact that I think that the idea that we have to wait for government to take the first step, or you have to wait for government to be visionary, or that you have to wait for government to carve the path. I think that Hilda has just squashed it and using her, audacious dream and her vision to put Nigeria's food and culture, on the global map. It's left to be seen what we do after that, and after all this attention that we have garnered from this incredible feat.
Right. And we also know that West Africa has a long-standing jollof rice rivalry between Nigeria, between Ghana, between Senegal. But how can Nigeria position a version as a cultural export and differentiate it on the international food stage?
Storytelling is everything. The way you tell your stories and the way you position yourself, especially in the global community, is what will be the major differentiating factor. And so it's important that we begin to tell better stories of our culture, better stories of our people, better stories of our cuisine. And that ability to control and shape the narrative is what will arrest the curiosity and the imagination of people across the world. And that's why they become curious about your country, they become curious about your food, and they are tempted to want to try to visit your country. So I think that the most important factor, the most important element here is our ability to tell the kinds of stories that will arrest the imaginations of people across the world. And it's those who tell better stories that will be able to gain global attention. And of course, you know that the most important real estate in the 21st century economy, especially in a world powered by AI, is attention. And once you can grab attention, it's more valuable than any real estate that you can get. So I would wager that what we need to do is to find very interesting ways of telling our stories, of shaping narrative, of branding ourselves better, and exporting this carefully curated narrative into a targeted audience across the world, and you'll see magic follow.
Right, and we've certainly gained the attention of on the global stage, certainly with especially with Hilda Bassi. But beyond Hilda Bassi, really, what are some of the specific investment opportunities that exist for entrepreneurs in food tourism? I mean, from packaged Nigerian meals to culinary tours, what are these investment opportunities?
I mean, there's a huge amount of investment opportunities for Nigerians. Now, Nigeria, for instance, has a very huge diaspora community across the world. While on the one hand, it's a bit of brain drain for the Nigerian economy, but on the other hand, it presents a huge market opportunity, especially for a lot of Nigerians who are nostalgic about their home. They miss their food, they miss their culture. They are longing to taste pepper soup. They want to eat boli, and things like that. And so entrepreneurs who are able to set up local restaurants across the world to serve, the huge diasporan market, I think will be able to find a cash cow in that particular niche. And I must say that there are a lot of entrepreneurs who are already doing this, whether it's in London, whether it's in Alberta, across the world. In Houston, in Texas, you have Nigerians setting up local restaurants to sell amala, to sell boli, and things like that. And that really and truly creates a huge market opportunity because the nostalgia, the fact that you miss home, the fact that you miss the food that you're used to, helps these entrepreneurs to place a premium on Nigerian food, the global market. So that is one huge investment opportunity, for entrepreneurs who are trying to play in the space. Of course, there's also several other, investment opportunities for entrepreneurs. We have a food, what I'll call a food content market that is, burgeoning in Nigeria.
Absolutely.
Many of them have become celebrities, if you check, people who are, talking about various Nigerian recipes and things like that. Again, because, like I mentioned earlier, because of the huge diasporan market opportunity that Nigeria has, there are lots of Nigerians who were not born in this country, but they were born to Nigerian parents who want to try out Nigerian meals, and they hook up to all these food channels, all these content creators who are doing brilliant work on curating how people can, do some of this food in their kitchen or in their homes, and a lot of people are making headway from that. So the opportunity is humongous, and I'm sure that entrepreneurs who have a savvy eye of recognizing opportunities are capitalizing on many of these things. And I just would like to see more of these things happen, so that Nigerians can, create wealth for themselves, lift more people out of poverty, and create jobs and opportunities for the huge young population that we seem to be churning out every year.
Right. I like how you said creating wealth and opportunities for this young population. But let's talk about, from your point of view as a media analyst, how really should Nigeria's tourism boards and our government agencies, how can they integrate the jollof effect into our national food tourism campaigns?
I mean, it's interesting that you are assuming that we have a national food campaign or some sort of strategy that, we need to integrating. I think that's the fundamental problem that we have. We don't seem to have a coherent tourism strategy as a country. And that seems to be our Achilles heel. We're just, stumbling and meandering through it. It's just like a blind bull in a china shop. So we just we're not just coherent about the strategy that we're pursuing, particularly with regards to tourism. And that's the first step that we need to take. We need a coherent national strategy of how we want to position ourselves in the Global Committee of Nations. And that way, once we have that strategy, we can then begin to imagine, the other pillars that will anchor this particular strategy, whether it's storytelling, whether it's human capital development, what kind of partnerships do we want to explore, what kind of market opportunities do we want to sort of sell to the global community, and exactly what our positioning will be, whether continentally or internationally. So all of these things starts with having a coherent national tourism strategy. There's a lot of talk shop about tourism in this country. There are tens and hundreds of events talking about tourism's or Nigeria's tourism potential. But what is grossly lacking is that coherent strategy, that carefully coordinated plan, whether it's from the federal government in collaboration with 36 of national governments, or whether it's even the 774 local governments across the country. So you just don't see that happening at scale. And except and until we do that, we're going to struggle to make headway. There's a whole lot of destinations to explore in Nigeria. There's a whole lot of attractions, that it's magnetic for people, and that will drive excitements for people across the world. But people are not telling stories about these places. And the reason people are not telling stories about these places is largely because people do not know these places exist. And it's largely, again, because government hasn't created the kind of access that you want to these kinds of places. And so the tourism sector in Nigeria has largely been private sector driven, whether it's Eco Hotels that's doing its tropical Christmas wonderland that is attracting diasporans from across the world on a 10-day staycation event, or whether it's brands like Jara Beach who are selling the kinds of experiences that they're doing. And you can go on and on and on and on. You'll see that it's largely private sector driven, and there isn't a carefully curated narrative, because that's when you start to ask the questions, how easy it is for it to get a visa to Nigeria. That's when Nigeria starts to also sit on the table and put together various African countries to say, how are we going to ease travel across the continent so that it's easy for us to get on a plane from Kigali and visit Lagos without any hassle. It's easy for you to move from Ouagadougou and visit Abuja. It's easy for you to move from Rwanda. And once you can deal with travel, and that requires a lot of leadership, you will ease the problem, of visiting your country. But it has to start from a national strategy, which lowers the barriers of entry into your country, which makes travel a lot more seamless, cheaper, and affordable. And then you have a carefully curated narrative that you can propagate, across the world. And that way, we can start, to make significant progress.
One thing that you've said, which I hold on to, is you've really hammered on a proper tourism strategy. But let's now talk about professionalizing the industry, which is something that I think is lacking, from culinary schools to chef collaborations and food innovation hubs themselves. How do we actually professionalize this industry?
So again, you already have culinary schools in Nigeria, right? I mean, I know one in Bagada. I can't remember the name off the top of my head.
Red Dish.
Who are producing fantastic and wonderful chefs, right? Take that again.
Red Dish.
Fantastic. You have brands like that who are training and fantastic chefs. You have tourism schools where people go to learn, get or earn degrees in hospitality and tourism. You also have training academies where people who want to work in hospitality are trained and are certified to work in that industry. The problem, however, which also goes back to the very foundation, is that there isn't a level of seriousness towards harnessing the potential of tourism in this country. Now, if we're serious about it, and if we're serious about harnessing its potential, its ability to create jobs, its ability to add significantly to the economy, what we will do is that we'll place a premium on human capital development, which means the quality of faculty in many of these schools will significantly improve. You would have better teaching staff, you would have better equipment, you would have better support for research and development, you would have better oversight from the government, whether it's federal or state government. We'll take internships a lot more seriously so that we ensure that the quality of graduates that we're producing are not just holding certificates, but they're able to translate their knowledge into the market. I give you an example. Across the world, especially in Western countries, they take very seriously hiring maids or nannies from the Philippines. There's this idea that, especially around home care, there's no other country or group of people or persons that do it better than the Filipinos, right? And you have a lot of middle income or high income families in the West who go through the hassle of trying to bring in nannies all the way from the Philippines. Now, the country in itself, recognizing this opportunity, has sort of formalized the process of building on that strength, building the capacity of people to improve their ability to manage homes, childcare, and things like that. And are also now setting up agencies and coordinating the movement of this human capital from their country to more richer Western nations. And that way, they are earning billions and billions of dollars in repatriations, which has significant impact for their local economy. And that's just exporting nannies, right? So you have to, branding is all about positioning. The world has to know you for something or a set of things that they are likely not going to find anywhere else. So once you think about experiencing Nigeria, how are we positioning ourselves right from the airport? Because again, like I said, if you take this industry very seriously, it means you're going to even train the taxi drivers that chauffeur people from the airports to their hotels, right? Because you want the experience to be end-to-end, starting from the airports when these visitors touch base in Nnamdi Azikiwe or in Muktar Mohammed, down to the hotels where they'll be staying for 3, 4, 5 days. Because you understand that somewhere at the back of your mind, once a traveler is comfortable and his experiences with the people that he interacts with are not only joyous but wholesome, it makes it easy for those people to make investment decisions in your country because it feels like home. So you just need this, it has to be a 360 degree that starts with human capital development, that improves experiences across board. And until we have that sort of bird eye view on the industry, we're just going to be scratching the surface. Because like I said earlier, at the moment, what you see is just passion from certain quarters, setting businesses, recognizing market opportunities, entrepreneurs taking advantage of little gaps, and sort of creating value in those tiny spaces. But there isn't yet a coherent strategy. And without that, the country will struggle to maximize the benefits from this industry.
All right. Thank you very much, Mr. Ayodele Adio, for sharing those rich insights on how to tap into our food tourism sector right here on Business Money. Thank you very much.